Textbook's right here, was here. No, it's right here. So let me close up some of these things. This one. All right. So let's go back to where we're supposed to be this coming week. Introduction on cash. Now, cash is a major asset. It's very liquid in a business. You know, you can't really, it's hard to drive away with a big piece of equipment. You can't really steal a piece of land or a building. You may burn it down, but you can't really steal it and use it for your own purposes. But cash is very, very fungible. It moves like lightning. It can be gone in an instant. And so companies have to control this very, very rigorously. And so there's lots of internal controls to prevent fraud and other misuses of cash. Okay, so you're going to go through what those typically are. And let's see if we can see if there's anything in here that might catch you off guard, right? So you have your internal control system, what it does, some of the legislation or policies within the United States or in other entities that actually work to control your processes and procedures internally. Okay, so most of this stuff is theoretical in this first part, and it will take a little bit of a adjustment to understand it. All right, so that's why they don't have too many videos. Just this, probably this final one to walk through. Okay, what are some things that help you with internal controls? And so some are weaknesses, some are strengths, and the examples that they provide here. That'll be key to understand. On the control of cash, let's see. Here's your cash management policies, generally speaking, right? Over the counter. Okay, so this is a way of controlling cash. And then usually there's like a petty cash account, and they'll keep track of cash coming in and out of that petty box, and then how to record any adjustments to it for one reason or another. Let's see, anything else in here? Control cash and cash receipts. No, this is pretty straightforward. I don't think you're going to have a problem with that. This is where you're going to have an issue in reconciling bank account statements. Okay. Back in the day, this is, you know, all manual. Currently, it's more automatic or more of a electronic process, a lot easier, but you still need to understand the fundamentals of it in order to be able to trace back some problems that you might find when your system doesn't align with the bank records effectively, right? So it walks you through what types of activity happens within a bank statement, and then it's going to show you how to reconcile this. And you might refer back to that series of videos that'll walk you through the process of doing a bank reconciliation if it is unclear to you for some reason or another, which I can understand how that can be. I actually, early in my career, right out of college, started as a controller for a startup construction company, and bank reconciliations took me days to do, to make sure that we didn't have any unrecorded transactions. And in addition to that, I also had reconciliations to do between, because we were owned by a parent company, they would charge us for work that they did, and we would charge them for services that they're providing. And so we had this reconciliation going on between accounts, right? Our account balance versus their account balance. And so it's really no difference when you're trying to reconcile what you have versus what somebody else has. You have to find where the gaps are, and then you often have to do adjusting journal entries on your side, or tell the other side that they have adjusting journal entries to do, right? Or you, in the case of a bank, you really don't tell them anything. You're just trying to identify what is it in the bank statement that's different from your account ledger, and making the adjustment. So this walks you through that process. All right. I definitely use those videos to walk you through this. And of course, there's this video at the end that kind of walks you through a scenario as well. This will be very key. This is very, very difficult to do. Probably the hardest part of this chapter will be bank reconciliations if you're not familiar with it. And so please make sure you spend some time on that. This part in terms of days sales uncollected, a lot of places call this days AR, what do they go, day sales turnover, but they're using the day sales uncollected. It's really just a measure of how fast are your receivables turning. Is it 30 days? Is it 60 days? How fast? Like in this case, you know, small Starbucks doesn't really have much of a receivables account, right? But every 14 days, their receivables is turning over, all right? And that's pretty much all you got. I think that's it for this. If there's any questions, let me know. Probably taking a lot of time. I'm going to split this out, obviously, into a couple different videos. So post any questions to the announcement. If you have any, feel free to contact me if you have any questions as well. I try to be responsive as soon as I can, you know, usually within a day, unless it's a question that's raised on Saturday. I will definitely get it to on Monday. And I wish you the very best. You're doing great. I know there's a few of you that are struggling, so just keep it up. I know it's hard. Those that are doing well, don't get complacent, because these next couple of weeks are going to be more difficult than they were before. Otherwise, look forward to helping out where I can. Take care. Bye.